So Ghana just released the national budget, and as an investor, I just want to know how that's going to affect us, and if it should change my strategy towards investing in Ghana moving forward. And after the national budget was read by Dr. Ato Forsen, the finance minister, some things were very intriguing to me, and he also made an interview with Bernard Alvele, and I think it gave me some key insights that I feel like it's quite important, and I would like to share with you guys and try and give you my thoughts on it and how it's going to affect me as an investor looking forward. So let's just go into it. So in the statement, he made this comment, and I would like to share with you guys. Mr. Speaker, notwithstanding the gains made under the IMF-supported program that was achieved through the painful sacrifice of domestic bondholders, external creditors, and taxpayers, the economy remains in distress. Key performance indicators to be assessed by the IMF staff in the upcoming fourth review of the program scheduled for April 2025, such as the primary balance commitment, inflation, and the social protection spending for end December 2024 are likely missed. Now, I don't know how he got that information, since the scheduled meeting review hasn't happened yet. So definitely he's the finance minister, and he's privy to some information that I wouldn't have. But it's quite interesting that he thinks almost a lot of the key performance indicators. So these are basically the benchmarks that you must make sure you pass for the IMF to release the funds or the tranches to you. So basically the IMF gives you a target that you must achieve. Whenever you achieve those targets, or at least very, very close to those targets, they kind of view it as you being able to progress through the program and you aligning with what they have for you, and then they can release the tranches, that's the capital or whatever money that they've lended to you during the particular period. So basically they do a review of your program, see if you are achieving the targets they set, and they release the tranche, or they disperse the money into your accounts, right? So him saying almost all the key performance indicators are being missed or are likely to be missed could potentially mean that the next tranche, which is probably like 360 million, is going to be forgone, or the IMF might likely not give it to us. So it's quite interesting, and if that happens, it's going to really affect the country in terms of paying back our debts, which is quite a lot. So I don't know how I feel about that, and it just kind of screams to me that maybe things are not as great as we would think right now. Now, when I even talk about our debts, I'm kind of intrigued, especially by the statement he made, where he said that most of the gains made from the IMF program was through the painful sacrifice of domestic bondholders. And I think he made much more emphasis about it on his interview with Bernard, and I would like to share that because I think it's very interesting.
Presented his data yesterday. He said we grew at 5.7, which is much higher than what everybody projected. And as a consequence, if you calculate our debt to GDP, it has come down. I believe it's in the lower 70s, probably late 60s. So that's the second evidence that they're saying that if you say things are bad, how come we grew higher than was anticipated? And as a consequence, our debt to GDP has also come down.
Okay, so first of all, the debt to GDP has only come down not because of the work, something that MPP has done or the previous administration did. The debt to GDP has dropped because last year the government gave bondholders, Euro bondholders, 37% principal haircut. So the Eurobond at the time, if it was 10 billion cedis, 3.7 billion cedis were wiped out, completely wiped out last year. And the interest that had accumulated over the period, another 37% were also wiped out. And so I don't know whether they are celebrating the haircut they gave to some citizens. And remember, this haircut were not only given to foreigners. There are certain domestic banks that invested heavily in Ghana's Eurobond.
Yeah.
There are certain Ghanaian individuals who, through their sweat, had accumulated so much resources and decided to invest in the Ghanaian economy. Instead of the government reducing expenditure, the government is saying, I'm passing on my burden to these individuals who have invested in my economy. And simple put, they decided to reduce their investment by 37%.
So I think it's very interesting, and I kind of agree with Dr. Atuforsen here. You could say that overall our debt to GDP has reduced, but when you go into it, what's the main reason for that? Is it because the government has cut back on its spending? No. Spending is as high as it was before the debt restructuring. So basically what's seeing, instead of the government trying to cut back on their expenses, which I'm not saying was the only way for them to try and manage the debt to GDP issue, because they could have done that and it still won't have been enough to pay back our debt. So but it kind of gives you that compassion as a citizen from the government. Like you feel like they are trying to put in effort to fix whatever problems that they are, instead of trying to shift it to you as the citizen. So me being an investor in Ghana, I kind of understand where the finance minister is coming from, because overall the debt to GDP did reduce, but then as a fixed income investor, your bonds were literally the principal, or the interest on your principal was literally cut by like 37%, meaning the amount you are supposed to receive in interest, about close to 50% is gone, and instead of even repaying you back on time, they've also shifted the duration of the bond. So if your bond was set to be matured in maybe 2025, it could have been shifted to maybe 2027. So now you are holding a less attractive investment for a longer period, where it just doesn't make sense for you. It would have been better for you to just disinvest it and probably look for a better opportunity if you did at the early stages. And this is not only true for fixed income investors, it's also true for equity investors as well. Because remember, a lot of banks, normally not, for Ghana, I don't think there are lots of individual or retail investors out there on the market that are actually investing their money. But most of our investment volatility comes from institutional investors. That's like the big banks, and most of the big banks do have equities or stocks that you could buy on the stock market. And I remember the 2022 period, when the domestic debt exchange happened, most of the banks suffered from it. Cow Bank in particular, GCB as well. Most of the bank recorded huge losses. I remember Cow Bank figures were very, very bad. I think they were the company that struggled the most, just because they had a lot of their money invested in the government bonds as to invest, giving it out to individuals as loans, just because the NP, or the non-performing loans at that time, was quite bad. So it made sense for them to invest that money to get, like, it's basically a risk-free investment at that point in time, because you expect the government to pay back. Lo and behold, governments just borrowed more than they needed, use the borrowings on programs or policies that didn't really yield much for the economy. So it's like the borrowing to me is not even an issue, because if you borrow and use the money for something that can literally help your economy, or you create policies that kind of brings a lot of revenue, increases your revenue, it kind of makes sense. It's like it's a productive borrowing. But then if you are borrowing and there's no value being added from that borrowing, then just basically waste, you understand? So as an equity investor too, like you kind of suffered. And if you genuinely did own bonds or bonds on the market, you're kind of like, I mean, I know you guys should remember the mark-to-market thing that happened to DataBank and a lot of brokerages. Like, it was quite crazy, yeah. So I kind of get what Dr. Atuforsen is saying, and it kind of makes sense that that's happening. Now, before I talk more about the investments, I just wanted to also look at another interesting thing that I think made a lot of sense, and probably I would want to share more light on. So I think when we go to page 52, yeah, so Mr. Speaker, the government will take steps to reopen the domestic bond market to extend the maturity profile. The reopening will be executed cautiously to establish large-size benchmark bonds that will enhance market liquidity. Now, I would want to come back here, but before that, I want to talk about this. He said, I am pleased to report that our government's proactive fiscal management has yielded a significant reduction in treasury bill rates. This achievement is a testament to the positive shifts in investor sentiments regarding our country's economic outlook. On 7 January 2025, we inherited a 91-day bill at 28%. Just after 2 months, we've been able to successfully reduce this to 17%. That's about 1,000 basis points reduction. The same for the 182 at 28%, reduced to 18.97, and we could also say the same for the 364-day. At January was 30%, now at 19.93. Yes. So this brings me to one point that I want to make, and that is I'm cutting back on my fixed income investments, specifically treasury bills. I feel like at the rate that we are right now, it's not as attractive as it was before, especially considering where inflation is at right now, 23.1%. We are literally making negative returns, which it doesn't really affect. Inflation in Ghana doesn't really affect treasury bill rates. It should, but it doesn't. It's really more about demand and supply. As long as there's a lot of people who want the treasury bill, or there's a lot of liquidity in the market, essentially the GOG or the government could literally reduce the rates on T-bills. And it happened this week as well. I think right now 364 is like 18%, then 91 is about 15%. So if you do the calculations, that's, let me see, 15 divided by, let's do the calculations. So if you do the calculations, it's 3.75. So that's basically how much you are making on your investments when you'll be making 375% when you invest in the 91-day bill. That's for 3 months. So imagine you invested 1,000 Ghana cedis. Yeah, so you would make 37 Ghana cedis on your money at the end of the 3-month period, which is quite bad. But the minister made some comments that I think are quite interesting. So let's hear them.
It seems to be the main business in town.
Correct.
I heard you in January say that you didn't think it was a sustainable way of going.
Correct.
And then I heard you also say that, by the way, in the past 2 months, the rates have come down. So in a sense, you're saying that you are easing, you are reducing your dependence on T-bills. Is that what you're saying?
Yes. Let me put it this way. We inherited a T-bill stock of 111.1 billion cedis. This must be rolled over week in, week out.
Yeah.
Coupled with your budget financing needs. So if you have a net domestic financing requirement, for example, of 1 million cedis every month, then it means if you have to roll over 9 million, you have to add 9 billion to 1 billion to the 9 billion so that you can borrow for that week. What we've done is simple. We have reduced the PSBR, the public sector borrowing requirement. And if you reduce the public sector borrowing requirement, what happens is that your activities in the market are not so deep, and so you can cut the rate as and when, depending on the rates that you want to cut. Over the period, we have also built buffers. Buffers because we were actually not necessarily overspending. And so if you are not spending and you have raised resources, you can intervene using your own resources to buy back some of the bonds as and when you decide based on your strategy. So you could see that we inherited a 91-day treasury bill from 28.9%. We have successfully reduced that to 17.99%.
Yeah.
So that represents in excess of 1,000 basis point reduction, or 10%. We've also reduced the 182-day treasury bill from 29% again to 19%.
And this is on the basis of your pulling back?
Yes, pulling back.
And also rejecting...
And our debt management strategy.
Fair enough. There are two questions on T-bills.
Yes.
Number one, the governor said at the Economic Forum that even though it's good to have lower T-bill rates, if they keep falling very low, it could affect the currency stability. I think I was there when he said that.
Yes.
That's point number one. Point number two, in opposition, you were concerned about the way government borrowed and even entered the domestic bond market without parliamentary approval.
Correct.
There are some people who believe that T-bills must also be brought to parliament for approval, so that they will be properly oversighted.
Okay.
In fact, somebody has taken that matter to the court as well. So two questions. The falling of the T-bill rates could affect the currency, according to Governor.
Yes.
And number two, would you agree that T-bill forays and all domestic debt securities should have a proper parliamentary oversight?
So let me start with the governor's comment, for example.
Yeah.
Yes, the governor expresses concern that if, for example, someone is looking out for a certain rate and he doesn't get it, and the person believes that if he invests in dollars, the dollar is going to appreciate against the cedi. But I don't think so. I don't think so in the sense that I have faith in the cedi. I believe strongly that the cedi will do well, and I do not believe that the cedi will go down the way others think. Based on the consolidation that we are doing, the fiscal consolidation effort that we are putting in place will mean that the cedi is going to be stable. And so if you are to rush and buy cedi, you may end up burning your hands. And so that is the kind of assurance I want to give to the people.
So, it's an interesting take from Dr. Atuforsen, and I would like to talk about him reducing the treasury bill rates before I talk about the governor's comments. So, I do agree that he can essentially reduce the rates as much as he wants, but he still has to kind of be careful not to reduce it drastically to a level where people just don't want to put in money into the treasury bill market, because regardless of whatever he says, the short-term treasury bill market is literally the only source of financing for the government at the moment. It could change because he says he is planning on bringing back the bond market, or issuing some bonds in probably the latter part of the year, maybe second half. We don't know if that's possible or not, and if he does, it should be at an attractive rate just to pull investor confidence or investor demand, because after a heavy haircut on the previous one, you don't expect people to be as confident in the new ones, especially if the rates are not as attractive as before. Yeah, I don't know if that makes sense. So I do think, like I said initially, right now inflation doesn't play a key role in where treasury bill rate should be. It's more on demand and supply. And from what the the finance minister has said, and I can attest to that they have kept a lot of buffers from the previous months. You could see, if you go through the previous auctions on the treasury bill market, whenever they issue a target, probably let's say the target was 5 billion, the demand is almost about 10 to 15. I think we've even reached 20 billion. No, I think the eyes were like 17 billion. They always accept way more than the target. If the target's like 5 billion, they'll accept about 8 billion and probably refinance the maturing size, then keep a buffer of about 3 billion. And they've been doing buffers of about 2 to 3 billions every single week. So I think they have enough that even if they don't get the demand that they want, they can still reduce the rate, and it won't really affect them as much in the short term. In the long term, it's not sustainable, but then in the short term, they can try and bring down the rates as much as they want, just because they do have the buffers to continue refinancing the markets without actually reaching their target. So it kind of makes sense, and I agree with that. But when it comes to the governor's comment, where he sees the finance minister has to be a little bit careful, because if the rates becomes unattractive, people will start looking for alternative investments. Where can I make a better return on my money? And like he said, the USD is a great option, because people do expect the USD to appreciate against the cedi, just because our economy is not as strong, and there's a lot of things that just happening in the economy that goes to show that if we don't really put in the efforts, our cedi is going to continue to depreciate. And he says he believes strongly in the cedi, and that he's putting a lot of fiscal measures, which is even in the budget statements. I would have gone through it if I had a lot of time, but I don't. But I'm just going to list a few of them. And he's going to continue to support the market with FX. But you have to understand that we can't do that continuously, just because our reserves might just reduce drastically, and that's not going to help anybody. So they have to find ways to kind of buff up or increase our reserve to be able to continuously support the market, to be able to stabilize and eventually even get the cedi to appreciate against the USD, which can't be done in the short term. They are planning on bringing the gold board, which is going to be literally acting like a cocoa board, to basically, instead of having normal companies export the gold, then receive the USD, whatever, the companies might not even bring that USD back to the economy, so we might not see the real return in the economy. But then having people go for their goods, and now you as the gold board will have the authority to export the gold, and now you are directly receiving the USD, where you can now use it to support your reserves and just have enough dollars on hand to be able to stabilize the city. It's also a good policy, but as to how it's going to be implemented and if the management is going to be good enough and efficient enough to run such a thing, because Cocoa Board, as we all know, is in massive debt. So what goes to show that the Gold Board is not also going to be in debt? We don't know. So it's kind of interesting, and even if they are able to implement it, no one knows if the Gold Board, like how long it's going to take to help generate massive effects for our economy. So he can be quite bullish about the cedi and believe that it's not going to depreciate, or it's going to outperform the dollar. But then, if that's, I feel like it's more of an opinion from him than as to what is really happening on grounds with the economy. Because when I look at inflation, it's bad. I'm getting real return. GDP, even though it grew, he himself said it grew more because of mining activities, where the galamsey plays a key role in the goods, which is unsustainable in the long term. So that also goes to show that the GDP growth is a little bit shaky. There's a lot of our GDP as well. Our debt to GDP. I've already explained at the beginning part of the video. So even if you look at the fiscal or the macroeconomic overview, there's a lot of iffiness when it comes to the economy. So I don't know if the targets that they've set for 2025 will be able to be reached. He targets that inflation is going to be around 11.9%. I don't know if we'll be able to reach that. If we do, hooray, that's great. But then it's quite difficult to foretell if that's going to happen. Very, very difficult to know. So at the end of the day, I don't really agree with that statement. I think the rate at which the treasury bill is reducing is quite bad. So it kind of brings me back to my main point, where I'm saying I'm trying to cut back on my treasury bill investment. I think it's really, the rates now are quite unattractive, and I feel like there are better or alternative markets where I can better improve my money. So like I said at the early stages, I'll probably make a different video where I talk more about my investment strategy. So I think this is some of the key points in the national budget there that I wanted to highlight, or I think stood out to me. Apart from the taxes, I wanted to really touch on the taxes, but I don't think I have a lot of time in this video, especially the betting tax, the e-levy, which I think is going to play a huge role for MTN potentially growing their revenues massively. MTN year on year, when you look at their statements, they always outperform expectations when it comes to revenue growth and net profit. One thing I do want from them is to, even though they already own a lot of their shares, I think the company owns about 80% with about 20% on the market. That's what we as the retail investors have to trade, or that's the amount of liquidity on hand for you to trade with. So it's very, very good to see. So I'll probably make that video if you guys are interested in that, about how my investment strategies have changed and what I'm looking forward to investing into and what I'm stopping or what I've stopped buying. So I think you kind of know what I've stopped buying, which is more of the treasury bills. I would want to know how the bond market is going to look like and how the economy is going to look at that point to kind of juxtapose if I would want to invest into the bond market, because losing 37%, it kind of, people who would want to go back into that market would either just be disengaged from their investment so much that they just look at the facts and figures. They don't really care about the emotional aspect, or they just have a lot of money on hand. So like I said, if there's anything I missed, or if there's anything you think was interesting in the budget, or how your investment strategy has changed after this budget, I would love to know. Thank you so much, and goodbye.